Assalamu alaikum, you're watching Views and News and I'm Faisal Rehman live from our Islamabad studios. Today we'll be talking about the State Bank of Pakistan's annual report. Now a couple of very interesting features are there, a couple of very important digits I would say. They've been exposed and well, the overall situation in certain cases seems okay, but in certain cases I think it's pretty worrisome also. But before we talk about it and I introduce you to our panelists, our production team has prepared a report. Let's watch that.
The State Bank of Pakistan in its latest report has projected that the economy of Pakistan is expected to grow strongly with 4 to 5% in the current fiscal year 2021 to 2022. The central bank also highlighted the challenges which Pakistan's economy will be facing, including exponentially high global commodity prices, elevated import payments, increased utility tariffs, high inflation, and expansion in services deficit. Moreover, the State Bank of Pakistan's annual report 2020 to 2021, which was released on 23 November 2021, stated that Pakistan's economy recovered strongly in fiscal year 2021 despite the uncertainty and challenges posed by the ongoing pandemic. According to the report, the services sector was spurred on by the performance of the commodity producing sector with a particularly notable rebound in wholesale and retail trade. The report added that the recovery in the labour market is ongoing according to the available industrial employment data and trends in the State Bank of Pakistan's Business Confidence and Consumer Confidence surveys. The report states that the National Consumer Price Index inflation is expected to remain within a range of 7 to 9%. The State Bank of Pakistan recommended that better commodity management practices, especially the build-up of reserves for wheat and sugar, would likely contain supply-side pressures from seeping into inflation during fiscal year 2022. Importantly, headline inflation is expected to retreat more visibly in the second half of the year with the phasing out of the base impact of the hike in power tariffs. The Fish Ratings has recently said that Pakistan has improved its capacity to make international payments for imports and debt repayments by hiking the key policy rate to 8.75% and reaching a staff-level agreement with the International Monetary Fund to regain access to the external financing.
Now, the details were in the report. Now, to talk about it, let me quickly introduce you to our panelists. We have with us in our studio. On my right is Dr. Shimial Daud Saab. He is the former president of Rawalpindi Chamber of Commerce and Industry. Thank you very much, Dr. Saab, for your time, sir. And we also have with us Ali Salman. He is the executive director of Prime Institute and also a senior economist. So thank you very much for your time. And from Karachi on Skype, we have with us Tahir Abbas Saab. He is the head of research, Arif Habib Limited. Thank you very much, Tahir Abbas Saab, for your time also, sir. Pleasure to have you on the show. But let me start off from you, Dr. Shimial Saab. I'm sure you must have gone through all this. Well, because there's so much of detail in it. But sir, let me start off from the most important part, and that is about the inflation issue. Now, they believe that the consumer price index inflation, that is around 8.9%. Whereas, when we talk about the food items, which is around 40 to 45%, as far as the budget of a normal household is concerned, for majority of the people, sir, they have just written one line there, you know, and yes, they also rose. The price went up. Number one, sir, there is no check and balance on the prices of the commodity. Everyone is fixing its own rates. Whether you talk about the imported products or you talk about the very basic ordinary products or the produce in general, sir, starting from tomato, potato, onion, to oil, to whatever. Now, that is something which really worries everybody. People are not interested about the digits, about the remittances. I mean, they really want that inflation should be under some sort of a check, sir. Let's start off from there.
Well, thank you so much, Faisal, for inviting me. The inflation obviously is definitely not reflected in the true sense, as you rightly said, because we know that there were supply issues. We saw that in wheat, we saw that in sugar, we saw a lot of pressure coming in when the government had to import to overcome the shortages. And with all of that, the transport, because of the rising prices of oil, has put pressure on this. So with this, these prices are factoring in with the existing government's move in terms of the external petrol prices, oil prices internationally. With that, we see that this has created a compounding impact. As you said that rightly, that it is factoring into 40% and above in terms of a household's income expenditures. So this definitely is causing all the hue and cry, and people are not really interested if we have somehow, instead of 3.9%, maybe shown that it's over 4% or 5% in terms of GDP growth or expected GDP growth. It doesn't matter. For the common person, it's about day-to-day living, and right now the day-to-day living already is becoming miserable. And as this you can say cycle of inflation, we can see the way the government is negotiated with IMF. So this is putting pressure on it.
Was they increased the interest rate by 150 basis points from 7.25 to 8.75%. Sir, do you think that particular move is going to put a check on the inflation? Because primarily, sir, this is what I believe, that the real reason is hoarding.
Okay. Well, Faisal, I disagree with that, and the reason is that our economy primarily is, a large chunk of our economy is undocumented, and so it is not dependent on borrowing. In that sense, the typical monetary policy that works wonders in other documented economies or countries might not have the same sort of result that is planned. However, the State Bank and the government and the IMF looks at it from that standpoint. What I can say, which is very clear, is that it creates more pressure on the government because our interest payments externally have gone up. Similarly, as I said, the compounding with the depreciation of rupee and all these things. I mean, these are all creating a cycle of inflation. And as the prior or the
rupee weakened during the last couple of
it's over 40%,
around 10%.
Yeah, so it's over 40% if we look at it on a longer period of time. So all of this definitely is putting a lot of pressure, and we can see that going forward, if the government really, as mentioned by the minister and ministers, I would say, that they are going to go on increasing the fuel prices and so forth and so on. It is further going to put a lot of pressure, and inflation might go in double digits.
Absolutely. Now, talking about inflation, sir, talking about the strength of the dollar against our rupee, and then on top, obviously, post-COVID era is very different because there was a lot of backlog. And just imagine, Ali Salman Saab, one 40-foot container that used to cost you $3,800 is not even available for $20,000. Forget about the fuel cost and forget about the other factors. Where are we heading now, sir? This seems to be pretty confusing, that yes, our export bills are there, but at the same time you talk about remittances pouring in, great, to support the overall forex reserves, sir. But having said that, again, I mean, this seems, to me at least, that this is not the right formula, not the right remedy what the government is doing at the moment.
Well, Faisal Saab, I think we need to look at the economy holistically, right? So if we look at inflation, then definitely it's worrying. The prices have gone up. There is no one can deny that.
And they will further go up.
And they will further go up. And the State Bank report acknowledges that, although State Bank report attributes the inflation to largely supply side constraints. You mentioned the logistics issues, but but there are other issues also. I think partly it is also to do with the currency in circulation. It has increased significantly over the last 3 or 4 years, from 4 trillion rupees to about 7.3 trillion rupees, and that's the classical understanding or explanation of inflation when there is too much of money.
Because the government is printing the notes.
Well, government is not, but the
government borrowing is so high.
Yeah,
and you see that what other solution do you have? Except
under the current program,
I think that is perhaps one of the major reasons for inflation also.
Yeah, but I just want to bring your attention to other parts of the economy, right? So I think we need to address holistically.
Okay.
So for instance, our own institute, Prime, actually publishes this prosperity index every 2 months, and we are just releasing that index actually tomorrow. And I was looking at the numbers for last 1 year, which has actually, we have we look at 4 factors. We look at inflation, we look at manufacturing, we look at the credit to the private sector, and we look at trade volume. And then we try to sort of, take a holistic picture. And actually picture is quite positive.
Your manufacturing increased by almost 14.9%.
Manufacturing has increased considerably. The credit to the private sector has increased about 300 billion rupees in a year. So this will obviously enhancing the capacity of firms to produce more, right?
They'll be more productive.
So they will be, hopefully that will generate more jobs and already creating more jobs and will create more jobs in the future. So we need to look at the economy as a whole.
Alisa, tell me one more thing. I mean, I was reading and I was going through this document, and I learned that 3 major crops, wheat, rice and maize, they say that they have shown significant growth. So good enough. So if there is, like, you call it a bumper crop, but at the same time people are not giving that kind of attention towards cotton. So we're importing cotton now. I'll just give you one example, sir. Normally we used to always have these pure cotton shirts. Now because of the lack, the domestic manufacturer, a couple of major brands which make shirts and a lot of other products also, so they're using 80% cotton and 20% rest of the stuff. Well, and the real cotton shirt, the actual cotton shirt, is 3 times the price of the other one.
It's not surprising. You see, I mean, we have set the price, we have set the incentives so that we are, for instance, look at the sugar, right? So government has provided too much incentives, from support price to subsidy on the exports over the years, that farmers have switched from cotton to sugarcane. Right. So and then sugarcane, and then you have 80 sugar mills which are protected by the government policies. So you have set these incentives, and these incentives are changing the cropping patterns. If you look at rice or maize, for instance, there are no government intervention in those crops
so far.
Right, and so you don't you see them like rice in terms of either price volatility, or maize. Pakistan has been increasing a lot, so you need to integrate them with the global trends, and government needs to take a step back and let the farmers and let the consumers make these choices. And sometimes, for instance, if we don't have to, if we can't produce sugar at competitive rate, then we don't have to produce it. We'll be better off by importing it. But by fixing our intervention too much, we are asking for more trouble.
All right. Now let's go to Karachi and let's talk to Tahir Abbas. Tahir, first of all, I'm sure, because you are the head of research of Arif Habib, this data really means a lot to you, and especially when it comes to the decision-making process. Stock market depends on this, sir. Now, currently, if you look at the overall figures, I'll just give you one figure. Let's start from there, sir. We always used to hear that, when you talk about the debt to GDP ratio, it should not be more than 60%. Now, sir, interestingly, the government says that, we have brought it down to 83.5%. I mean, as if they've done something really great. The point is, sir, that all these digits which we have with us, I mean, few show, I think, great signs as far as progress and growth is concerned. Few are alarming, as I earlier mentioned. Your take on that point? Sir, if you may switch on, I think it's mute. Is it mute? Your speaker seems to be mute. Yeah, go on.
Okay. So I was saying, hello, can you hear me?
Yeah, I can hear you, sir. Please carry on.
Okay. As you stated, that debt numbers are important, and you can always see that in context with the debt to GDP ratio. So I would like to mention that as in comparison with fiscal year 20 and fiscal year 21, our debt to GDP ratio has actually declined. Our total domestic debt increased to 26.2 trillion as compared to 23.2 trillion in fiscal year 20. And as far as external debt is concerned, it has increased to 12.4 trillion as compared to 11.8 trillion in fiscal year 20. So, as a number, debt to GDP has clocked in at around 81% in 2021 as compared to 84.1% back in 2020. So what has accelerated this pace? So obviously government needs to fund the fiscal deficit and obviously the current account deficit, and by doing so they need to increase the debt, both domestic and external. So the point is, when we try to grow like 4 to 5% of GDP in any year, we face problems on the fiscal front as well as on the current account deficit, on the balance of payment front. So this has happened again, and I believe that is the prime reason the State Bank of Pakistan has proactively increased the interest rate by 1.5% to 8.75 as of now, just to avoid the overheating of the economy. And this is a very basic structural issue. We cannot rely on the remittances for a longer period of time. Obviously that has some sort of capacity. After that we don't foresee any growth in the remittances. So the problem is we need to focus on our export, the long-term sustainability of the balance of payment, and then our fiscal side is the long-term sustainability of exports. And obviously that cannot be happen in like a year or two. We need to devise policies on the export front, while simultaneously on the fiscal side, I think the more focus should be on revenue generation. As far as revenue generation is concerned, I'm not talking about the indirect taxes. I think we need to focus on the direct taxes, and basically we need to increase the tax net. We need to increase the number of filers. We need to give incentives to the people who file taxes. So in that way, by focusing on exports in the longer term, we can manage our balance of payment, and by focusing on the increase in the tax net, we can manage our on the fiscal side.
I do understand that revenue collection is very important. Broadening of the tax base is, I think, something which every government has claimed they will do. It has never been done, unfortunately. I remember I was talking to Dr. Hafiz Sheikh Saab, and he was the finance minister of Pakistan People's Party, and he said that we have in fact identified 700,000 people. Well, then came Nawaz Sharif Saab, and then again Hafiz Sheikh Saab became the finance minister in the time of PTI, and again I asked him this question, and nothing had happened. Identification, I can identify more than that, sir, but nothing has been done so far. Now the point is that there are certain things, obviously you're very right, that you can't totally depend on the remittances forever. Your export needs to increase. Now, sir, talking about the distribution, I think that is one of the most important part. Logistics. You make a product, and then there's a fixed cost, there is a variable cost. The variable cost is increasing, it's fluctuating, it's not constant. You talk about even your fixed cost, that also changes because of the government policies, unfortunately. And now, sir, I was just talking to my guest earlier before the start of the show, and in fact, we were sharing this news that the 40-foot container that used to cost you $3,800 now costs you around $20,000. This is unbelievable, but this is a global pattern again. So don't you think, sir, this is going to be a real issue, a major hindrance for our own exports?
Yeah, I completely agree with you regarding that, and we have witnessed to some extent a slowdown in the exports during last couple of months. I believe if the container and these freight charges were normalized, like I have talked to some big textile mills operating in Karachi, and they are very much worried about the freight charges. And obviously even some stated that some of their consignment has been cancelled or deferred because of the high freight charges in the Europe. Like one I was talking to one textile mill representative, and he said that because of these higher freight charges, their client just defer their shipment and asked and told them that they are just bringing goods from Turkey, and the local transport, road transport is cheaper than
Cheaper.
the freight charges as of now. So yes, this is a big problem, but I believe this is a temporary phenomena, and this will not going to last longer. No one can predict how much time it will last, but this is, I would say, the abnormal times post COVID, especially in terms of commodity prices, in terms of freight charges. And I think once these things will settle, eventually we
I would
can
say,
manage to.
Abbas, by the end of the current fiscal year, let's put it this way. I mean, this is what seems to be like. Now, coming to you, Dr. Shimial, again, when we got to know about this Pakistan IMF, staff level meeting, and finally we have been able to strike the deal, and $6 billion would be pouring into our system, and then we got to know, no, hold on, 1 billion on certain conditions, and those conditions are very tough, sir. Now, one of the major issues, sir, and we've also learned, there is a possibility of a mini budget coming in, sir. Subsidies would be taken away. Certain new, I would say, mindset, or perhaps I would say whatever has been told to our government officials by the IMF, that ideology is going to be the way forward now. So those conditions are pretty tough, though they are good for the long term. But sir, for the immediate solution, I think that is going to be another blowback for the finance sector.
Unfortunately, they are the same conditions that have been imposed or suggested in the past, and again they are suggested this time a little. We have less as time is passing, and as we are going into subsequent programs, our negotiating space is drying up, and the reason is that the debt has risen, our collections, our revenue collections, our taxation mechanisms are limited. Our lifeline has been for many years now the expats, but as rightly pointed out by Tahir, that is limited, and it has right now a limitation. Why? Because the quality of the public that is outside, that is factoring into that expat community, sending in remittances, is mostly labor related. And as the world's scenario is changing, the trends are changing, that lifeline is limited. Similarly, if we are dependent on our exports for our reducing our trade deficit and increasing our revenues in terms of our foreign currency, that is also limited. We might have maybe a decade or more. I was at a conference the other day, and the experts were sharing that the new trends are coming, and if we are trying to emulate those organizations and those countries that are doing well today, we are a bit late, because already the modernization is going in a different trend, that we might lose that lifeline. So until and unless we really look into the horizon and we set our house in order, we will always be late. And this is what happened. We had 3 years. We have been into this IMF program, and within these 39 months, or less than that, since we have been in the IMF, we was later when the government came. We should have organized ourselves. The same causes that resulted into high expenses, losses, we have not made them accountable. We have not set those state-owned enterprises. We have not put them off our books. We have not, organized our revenues. We have not brought down the taxation. We have not shifted from indirect to direct taxation. So until and unless we do these things, they will always, it's like you don't do your homework in time, and then you're left with the minimum time.
What's the hindrance? Is it a political decision, perhaps?
Faisal, these are difficult decisions. I mean, these decisions means that the government has to take hard decisions which are political, they have political fallout. That means they have to set their house in order. I was listening to one of the headlines just now on PTV News, and it said that the minister said that in the interest of the public, the petrol stations should call off the strike. What I would suggest, in the interest of the public and the nation, the expenses should be brought down by the government. Why don't they do that? So there are so many things that need to be done in the interest of the public.
That most likely the fuel prices will go further up.
Exactly. So what I'm trying to say is that since we did not do the required steps, the steps that were hard steps, now they're all pushed into this little space where there are some factors which we don't have any control, which are external factors, as you rightly pointed.
Macro-environmental factors. Perhaps.
International, scenarios, which we don't have any control over. So now they have come. So a perfect storm is starting to brew. So what needs to be done is that when we have the liberty, when we have the fiscal space, when we are little comfortable, that is the time to take those steps. What happens is, as soon as we become comfortable macroeconomically, we do not do those steps. We do not take those hard steps. So it's about time that we take them this time, and then hopefully we can carry and build upon that. So I think that we will have to pay the price. Now.
We are already paying the price.
Further, it is going to be further escalated.
Now, Salman Sahab, another important area. Let's talk about the fiscal deficit. Let's talk about the current account deficit. Again, the kind of expectation the government had about fiscal, they wanted to keep it around 3%, if I'm not wrong, and it was hovering around 6%. When you talk about the current account deficit, sir, again, you are importing. Whenever we used to import, I used to hear that, Pakistan is importing a lot of machinery in the textile sector, and this is going to be very productive. You just wait for another 2 to 3 years, our exports would just multiply, because at that time, the textile export was around 70% of the total export. But sir, this is what has happened in Bangladesh instead of Pakistan. So the formula was applied here, but the result was seen in Bangladesh.
Well, actually, Bangladesh has followed a different strategy. But in terms of Pakistan, I think at least the textile factories are producing at full capacity as we speak. Right? So it has happened. I mean, we have imported plant and machinery over the last few years. And also post-COVID, Pakistan was one of the countries which were like early adopters post-COVID situation, and Pakistan was able to actually gain advantage of a lot of deflected orders from the world market. And last couple of years, textile industry generally has done very well within its own limits. Now, the overall export situation or the composition of export hasn't changed. But I'm saying that the
no product diversification, sir.
Yeah, exactly. Nothing, so that has not happened.
No tapping into the new markets.
So because of the productive structure of the economy remains the same. Because as I said before, the incentive structure remains the same. And this is something which we, as a part of our also economic advisory group, are highlighting in terms of what needs to be done as the new vision of economic transformation. Because we are stuck with this discussion about growth and inflation. I think we need to talk about transformation. What is happening is, for instance, in the previous era, we actually incurred a lot of debt, hoping that debt would ultimately be translated into growth. It didn't happen. That was the sort of philosophy. And therefore, I think we need to change this. And if you allow me to share, like,
please.
You're talking about fiscal deficit. We had this obviously the debate about the taxes and tax collection. Recently, Chairman FBR was there in our conference, and he told that there are about 4 million people who should be paying taxes who are not paying taxes. Like about 3 million are paying, and there should be about 7 million total, but 4 million are not in it. So that's a huge number. And this issue of capacity of FBR and etc. Well, on the other hand, we're also allowed
automation, sir.
We are also so they are doing, but it's still significantly short of what is needed. On the other hand, we are also not able to bring spending constraints, right? So we, let's say our tax collection would reach to about 5 trillion rupees, right? This fiscal, right? And out of 5 trillion, if you look at the exemptions, if you look at the money we are doling out on state-owned enterprises, especially those the inefficient ones, if you include the energy circulate, the number would be staggering. It can reach up to 2 trillion rupees of wasted resources. And you know, let me also remind you that this fiscal year 21,
so we had 500 billion, I remember, when Nawaz Sharif presented their first budget.
Yeah, so this time
504 billion.
So they
everybody was screaming.
Yeah.
And now you're talking about 2,000 billion.
That's right. That's right. Absolutely. So I mean, these are the structural problems which we haven't really addressed, and we just have to face them. So I think my point is that you have to talk about the spending constraints as well as the tax revenue. So just to give you one sort of frightening statistic, you know, our tax revenue collection reached fiscal year 21 to 4.73 trillion rupees, right? And out of that 4.73 trillion rupees, we spent 2.85 trillion rupees on debt repayment.
Imagine.
Including the principal and the interest. That's about 60%. So
what are you left with then?
So what are you left with? You know, and then you have defense, and then you have education, and you have to run the federal government.
Straight away, sir, 1,000 billion for the defense.
So you
let's move on then.
You have to actually address.
But sir, another very important point before I go to Karachi, and that is about another very interesting condition by the IMF. They say that you have to cut down on your spending on the various sectors, like which we call this PSDP. Secondly, another important factor, they say that you have to take away the subsidies, and they talked about privatization and liberalization. Sir, you are telling us that almost 2,000 billion or 2,500 billion rupees is just going in the dustbin because of the inefficiencies of those certain entities, which very transparently should be, I would say, privatized. But again, sir, because People's Party would come up with the reason that people would lose jobs and what. I mean, it's unbelievable. Where you need 5 people, you have in fact hired 50. This is what People's Party has done.
I mean, the money which we have paid on sustaining steel mill since 2006.
That cost is more than the actual cost of the steel mill, sir.
No, actually something else. In that money, we could have erected 2 new state-of-art steel mills.
So you want to give me a heart attack, sir? I love my country and I just hate these policies.
I too love my country, but we need to change the policy outlook drastically.
These are hard steps that should have been taken. Everyone was expecting that this would happen in this tenure. So because it has been delayed, again they are still there. So they are lingering on. If you don't do them, they will keep on lingering on into the next program. So they have to be done. Somebody has to do it.
But since again it is not going to be a popular decision, you'll end up losing your votes. So you can't do that, and you will never do that. You will end up printing notes and just we
have to take the nation into consideration.
The steel mill is just one.
No, but then the nation voted for change, so the change has its costs.
Well, I hope
it starts from me. It starts from us.
Change, the actual change, the visible change. But let's see. I think again these decisions are not easy, as Dr. Saab mentioned. Obviously, they have their own fallout factors too. Now, coming to you, Abbas Saab, one important area, and that is about the dollar issue. A lot of people believe that, well, there is a lot of demand because of Afghan issue, there is a lot of pressure on Rupee, and so on and so forth. So many other reasons are there as well. Obviously, flight of capital perhaps is one, and then we do understand that there are so many other factors. Now, sir, do you see dollar being stable at some, let's say 175? Let's put a a number, so that we believe that it should hover around that particular number rather than again creating uncertainty. Number one, how to do it? Like the previous comment of Nawaz Sharif Saab, I remember when they wanted to bring it down to 100, sir, they in fact released around $3 billion from the State Bank of Pakistan too. So these kind of activities would be the real deal, or you believe that there has to be a proper formula, sir?
So very, I think the important question you have asked regarding the currency. Just to give you a preface of that, we have witnessed the fixation of our currency from 2014 till 2018, and after that we have seen what has happened, and not only with the currency on the inflation, uh, the its impact on the power sector, its impact on the gas sector, as both the sectors revenues and tariffs are dollar denominated. So I think this was one of the best decision of this government, that they have just say its currency on the demand and supply base. And I think because of that, our currency is the first line of defense for balance of payment vulnerabilities. Secondly, you are 100% right that what would be the exact figure? Will it stabilize on 175 or will it come down? I think, as State Bank also stated earlier in their different press releases, that we have a variety of inflows going forward. Like for instance, we will receive $1 billion from IMF. Afterwards, from World Bank and ADB, we will receive $1.4 billion. Again, Saudi Arab 3 billion deposit is pending. In addition to that, government is also planning to raise Sukuk and Euro bonds. After
Yeah.
that, WAPDA is also planning to issue $500 billion
So
bonds.
these euro bonds are worth around $3 billion. Am I
One
right?
1 billion, 1
One
billion.
billion. Okay. Okay.
Yeah, 3 billion from Saudi Arab, and WAPDA is planning to raise 500 million. Remittances are expected to remain stable, not too much growth, but we can expect 4 to 5% growth. So I believe there are a lot of inflows, adequate inflows to support our balance of payment account. And I think with all these dollar coming into the country, I think the dollar will stabilize at around 172 and 173. So for going
Okay.
forward, we can see the average inflation differential between Pakistan and United States is around 5 to 5.5%. So on a citrus parallel scenario, we can expect the currency to depreciate by 5 or 6% on annual basis. But at this point in time, I think I am expecting a little bit appreciation from this level. The currency will stabilize at around 172, 173, and then obviously on a yearly basis, it will depreciate by around 5%.
So one more point, and that is you two talking about dollar stabilization. Sorry, I think that's really important. But 172 is still very high. You talked about inflow, deferred payments regarding oil, 3 billion from Saudi Arabia. Again, do you see oil getting stabilized around 95, 94, $93 a barrel? Or again, you could see, whatever we witnessed about a year ago, that could happen again. The reason is, in the long run, it seems that, I'll just give you one example. A country like Norway, they have a population of around 3.5 million, mostly Norwegians and then Pakistanis. Interestingly, the point is, over there, 62% of the total vehicles on road are electric vehicles.
E-vehicles.
Now, in Pakistan, this trend will start at some stage. So, in the long run, definitely, dependency on oil will be reduced. But as far as the immediate future is concerned, what do you see, Abbas?
Okay, as far as the level is concerned, 173, I was just checking the average at which since May 2019, State Bank has average real effective exchange rate at around 95.5 or 96. And current real effective exchange rate REER is around 93, 93.5. So I think there's a little room for the appreciation. However, yes, as I stated earlier, that our currency is now demand and supply driven, and any shock on the external front in terms of higher import, or on the positive side, like higher remittances, or any other higher inflows, the currency can adjust accordingly. One more important thing regarding oil, yes, obviously our import bill comprises around 25% of petroleum products, including
Correct.
RLNG. So the lower the oil prices globally, obviously our economy as a whole and especially our imports will gonna benefit. As far as specifically oil prices are concerned, I believe the oil prices level are a bit high at this point in time. We have already seen that US, India, China, and some other countries has already released from their strategic petroleum reserves
India
to
did, in fact, and
stabilize
Americans were
or
not happy
lower
about it.
down global oil prices. But we have yet to see the response from OPEC and OPEC Plus. That would be crucial. But I think in the longer run, the oil prices should come down. Reason being, because of the COVID, we have seen the shale producers in the US has gone out of the business, and with these level of oil prices, again they'll become compatible and profitable, and they'll again kick in. So I think in 2022, like in May 2022, when the rollover for the cut of OPEC and OPEC Plus will be completed, we can expect the excess supply in the global oil market. So in 2022, we have average out our assumption of oil prices at around 65 to $70 per barrel.
All right. Now, last quick comment, and that is, just imagine the level of blunders the government has committed, interestingly, that there was a delay as far as placing the order of LNG is concerned. And now the entire population is suffering, and December is about to start. There is no gas available even for cooking. A lot of people are using these commercial cylinders at home. And whatever is happening is right in front of you, sir. And on top of that, you talk about the gas prices or the energy cost. It's unbearable for many people now. Now, when this is happening, sir, I fail to understand why they knew this is going to happen. Why didn't they do it earlier? I mean, it's because they're not paying from their own pocket. It's the money of the taxpayer to facilitate them. You understand my point, sir? Now,
Yeah.
do you expect the government to take some legitimate, wise decisions in the future regarding such issues, sir?
Okay. As far as RLNG is concerned, I agree. The demand forecast has been terrible with the government. But actually, there's too much fear in the bureaucracy. Like, for instance, just to give you an overview, obviously, there has been demand of RLNG, and everyone is aware that in winters we have shortfall of gas. But obviously, that demand is pertaining to some specific price, right? So, at the price of $7, $8, or even $10, the demand was there. But at the price of, let's say, spot cargo arriving at $35, I don't foresee any demand. They can only go into the power sector. Otherwise, domestic users, which are paying, I guess, $1.5 or $2 at this point in time with different slabs. Obviously, high slabs have higher prices, or even industries. Nobody
All
is
right.
compatible at the spot rate of $35 per MMBTU. But the overall point is, yes, I agree. There need to be a big improvement required as far as RLNG demand is concerned, and government need to forecast demand correctly. But on the other hand, what we do basically in winters, we just buy gas, RLNG from long-term contracts and spot cargoes. Just mix it. We have a basket price for RLNG. Currently, it's around $16 per MMBTU. We just divert that gas to the residential consumer, and obviously because this is a political decision, and because there's a lot of hype in the media regarding gas shortage for residential customer, and that in the summer we tried to bridge that gap by giving our natural gas to the industries. So again, this will create this is creating basically a circular debt. Another important point regarding gas sector.
It's not a little factory or a SME that you're running. It's a country. All right, sir. Thank you very much for your comments, sir. Another very important factor is the political uncertainty, sir. PDM or no PDM, TLP or no TLP. People would be out in the roads. PMLN, Maulana Saab, along with the other support, they will be out in the roads. I think that is also going to create a lot of havoc, sir, a lot of problems in the coming days, because at the end of the day, when a report is shown on BBC or CNN about the political uncertainty, and then we talk about bringing in the foreign investor, that we have a very conducive environment. That environment that is shown on TV is not conducive. But anyway, Dr. Saab, thank you so much. Ali Saab, was a pleasure having you, sir.
Just make
there you go, sir. Go ahead.
Response. You were saying about the long-term policy. The only long-term policy is the right pricing. We talk about gas or anything, unless you admit and bring in the long-term pricing.
It's not about the availability, it's about the availability.
Because pricing sets the actually consumption, and prices sets the incentive.
Absolutely.
So we have to bring it back.
Fear of failing is going to result in failing to deliver. So somebody has to take those steps now.
Well, let's be optimistic, sir. Things would be sorted out soon. And that's all we have for this hour. I'll see you tomorrow at 8:05. Till then, you take good care. Khuda Hafiz.